Affairs. And I hope all of you that were able to attend Louisiana REALTORS Spring into Action Legislative Conference last week had a good time. We tried to put a little bit of education in there, a little bit of Realtor Party, the primary focus of the Realtor Party, and we tried to pack a lot of fun into it too. So we hope you all enjoyed it. Today, we are talking about something that has been a hot issue for the past couple of years at the legislative session each year at the Capitol, and that is how Louisiana structures its tax system to fund its operations at the state and the local level. You have a candidate running for governor and many others that say that it's time for change and we need to shake things up. We probably do. How we go about that, though, is the $100 million question. So part of this is how the state does income taxes, sales taxes, and property taxes at the local level, and how that homestead exemption factors into that. So in preparation for this year's upcoming statewide elections and for your daily practice, we had advantageous consultants, some of the best in the business, prepare what we're calling a primer on the property tax system in Louisiana. And with that, I will hand it over to Advantageous with Jason DeQueer and Bob Adair and Mary Robinson. So y'all take it from here. And just so everybody knows, we're going to let them cycle through the presentation, and then we'll hold questions to the end. Of course, you can put them in the chat. We just ask that you indicate which slide or which topic so we can make sure that we cover everything correctly at the end. Thank you.
Well, thank you, Kim. And first of all, just as a mic check, can y'all hear me okay? Kim, is my volume good? I see thumbs up.
You're
so
good.
That's always,
Sorry
that's
if I wasn't.
No, that's always a good sign that technology is working. And so, first of all, before we get into the presentation, I just want to say that both Norman and Kim do an outstanding job advocating for the realtors and this association. I've been working with and have known them for a number of years. Anytime the word tax comes up, they come find me. We start talking about good tax policy and making sure that there's no real harm or impact to your association. But they do a tremendous job for you and a ton of respect for what they do. As for myself, I am the co-owner of Advantis Consulting and Advantis Law. Just to give you a little background, Advantis Consulting and Advantis Law, we're a full-scale state and local tax firm. I've been doing this over 20 plus years. I'm going to introduce the other folks here from Advantis. And I often tell people there has never been a state or local tax that I have not seen or come into contact with. So we do everything from sales to property, income to franchise. But that's not what we're here to talk about today. Obviously today, Kim asked us to focus on property tax, the homestead exemption, and a little bit of flavor as to where we kind of see the outlook, the environment as it relates to property tax and what the legislature is considering with this state local swap shift of how we fund government. And I think that was what obviously she was alluding to. We'll get into that a little bit. And I'm going to turn it over really to Bob Adair and Mary Robinson to my right. Bob Adair has roughly 40 years of experience in property tax. Very fortunate to have him as a senior advisor with Advantis. He's seen it in Louisiana. He's worked with the tax commission. He's worked with every local assessor that we have, but he's also done this in other states, particularly a lot in Texas, and can kind of compare our structure to that of other states and our system. And then obviously Mary Robinson here, before I go into my next set of comments, she is our legislative expert. She is at the Capitol every day. If the word homestead comes up, she's tracking it, she's following it, and we're getting that information back to Kim and Norman and she's going to weigh in a little bit on the legislative side. But as Kim was mentioning, there is a gubernatorial candidate, Richard Nelson, who's from the North Shore area, and he wants our structure to look a lot more like that of Texas. And I get that. A lot of people point to Texas and see that Texas may be doing things better than we are, but obviously we know that Texas is funded a lot more on property tax than most states, unlike Louisiana, and that's how they get a lot of their local funding. What this big debate is really about is, should we, as meaning Louisiana, push more control and more authority to the local level in terms of giving them more authority to handle and increase taxes on their own? And when you talk about that, you're really talking about two taxes, property tax and sales tax. Well, this conversation is going to be less about sales tax, and that's what his initiative is. And the reason the homestead, if you were following Richard Nelson's package any at all, what he was doing is talking about pushing homestead, which is a constitutional exemption, down to local governments and either giving them the option for each parish by parish, to decide whether or not they want the homestead exemption, and how much the homestead exemption should be, or whether or not they should phase it out, eliminate it because it's their revenue. In exchange, what he wanted to do is say, well, the state is going to stop subsidizing the homestead by virtue of giving local governments more control over raising it or lowering it. We know that could have a big impact to what you do in terms of obviously sales of real estate and homes and those sorts of things. And so Kim and Norman asked us to prepare a presentation, kind of a property tax 101, to walk you through a lot of the fundamental principles and basics of not just the homestead exemption, but property tax, how it works, millages, how things go on the rolls, and how assessors utilize that information to generate a property tax base at the local level. Obviously, in your line of work, y'all play a big role in that, as home sales being a big part of that base in every parish. So with that, I'm gonna turn it over to Bob and to Mary. I know they've got a presentation here prepared for you. I'm gonna be tuning in, but this is gonna be primarily their show. And then if there are any questions or thoughts or comments, we wanna get that feedback from you so that we can answer those questions. And if there's more information that you all would like from us, we want to be able to gather that information and share it with you. So thank you very much, and appreciate the Realtors giving us this opportunity to do this overview for you. Thank you.
Thanks, Jason. So I'm going to go ahead and share my screen with the presentation. And I apologize, I've been losing my voice all week, so if it gives out on me, I'm sorry. As Jason said, my name is Mary Robinson. I'm Advances Consulting's Policy and Legislative Affairs Specialist. I've been with Advances for about 2 years. I graduated from LSU in 2020 and then joined Advances shortly after, where I specifically joined their external affairs team, where I've focused on policy and legislative affairs work. So you all should have received I believe Kim told me that she had sent out the kind of packet that we had put together for y'all. That's kind of a property tax overview. So this presentation is going to kind of follow that outline, but just at more of a high level. And so, yeah, I guess we'll go ahead and get started. Oh, and I forgot to mention, I'm joined by Bob Adair. And Bob, do you want to give some background information on you as well?
Sure, Mary. Just to give you a little background, I do live in Texas, but I spent a lot of time in Louisiana. I retired last year from Phillips 66 after 15 years, and I was with Entergy for 6 years before that, and Shell for 13 years before that. So of course, those companies have a lot of property in Louisiana, and I've chaired tax committees with LaMoga, Lobby, and LCA. And so I've had a lot of interaction, but it's mostly business property. And So, but I will be talking about a little more about residential in this presentation. So that's kind of my background, and we'll pass it back to Mary.
Okay, so yeah, we're going to go ahead and get started. Bob, do you want to kick things off for us?
Yeah, I thought at first I'd give you a high-level view of property taxes, and these are I will emphasize these are estimated property taxes. The total is actual from the Tax Commission annual report. But if you add these percentages up, it's roughly 53% real property and 47% business personal property. So I wanted to start with that to give you an idea of the magnitude of, and these are in millions, of course. So it's so that it is a huge amount of money, and I think anyone that even has a home or a small business realize that property taxes are significant. So that was my point of this slide. And Mary will get into the legal authority and property taxes.
Yeah, so before we get too far into the presentation, I do think it's very important to highlight where these provisions are being sourced in law. So when you're looking at all of the provisions that we're going to be talking about, they each come from a section of law or rules. So we're going to be looking at specifically the Louisiana Constitution, and within the Louisiana Constitution, it's focused in Article 7, and then you get even more specific, you're going to look at Section 18, 20, and 21. So Section 18, as you can see, is going to go over the classifications of property, valuation, special assessment, and tax. Section 20 is focused on homestead exemption. Section 21 is focused on all other property tax exemptions. And you can find the Louisiana Constitution on the Louisiana Legislative website. In addition to the Constitution, there are provisions in the revised statutes, which are also included on the Louisiana Legislative website. So within the revised statutes, you're going to specifically look at Title 47, which is the revenue and taxation statute. And then in addition to the state constitution and the revised statutes, the Louisiana Tax Commission publishes rules and regulations for property tax. And those can be found on the Louisiana Tax Commission website. And we're going to be referencing the Louisiana Tax Commission a lot throughout this presentation. So the acronym for the Louisiana Tax Commission is the LTC. So if you hear us say LTC, that's what we're talking about. Let me go to the next slide.
All right. I realize there's probably a significant number of people in this audience that do not work with property taxes every day. However, I wanted to go organize this. This is kind of the outline of the presentation, by the way. And before we have the fair market value of taxable property, we have exempt property. So we'll go through that first. But at least I want to give you an example of, and most of you can relate to this type of example because it's residential. If you have a $200,000 home, you get the homestead exemption, and then apply a 10% assessment ratio. That's by the Constitution, and Mary will go through that a little bit more later. And then to calculate down to an actual property tax. So this will be the basic flow of the presentation, but we'll go into significantly more detail in certain areas. And I'll do my best not to get too tax geek, but kind of relate it to you and be glad to answer questions later on.
So when looking at property taxes, there's some key dates that you want to definitely keep in mind. So January 1st is the valuation date, which will be based on condition and ownership. April 1st is the deadline for filing self-reporting forms for business personal property. And there's a little condition with that within 45 days of receipt in Jefferson Parish. So specific to Jefferson Parish, that date is within 45 days of receipt. The next date, August 15th through September 15th, is what we call the open roll period. So within that 30-day period, parishes select their exact dates, but have 15 days for public inspection. And each parish is different, and their exact dates are usually published on their assessor website or in local newspapers. But the only parish that's very different of all the parishes is Orleans Parish, and their open roll period is July 15th through August 15th. So you'll kind of see Orleans Parish tends to do things a little differently, which is not shocking, knowing Orleans Parish. But the next date we're going to look at is November 15th, which is the Louisiana Tax Commission, when the Louisiana Tax Commission, or the LTC, certifies assessment tax rolls by the state, and then sheriffs and tax collectors then mail tax notices to property owners. And then the last date, December 31st, is when property taxes are due, and they become delinquent after that date, except for certain allowed extensions. And then for Orleans Parish, that date will be January 31st. And I don't know, Bob, you have anything you want to add to any of that?
No, those are the primary dates. There are some, I'll be quick to say that if you appeal any dates, we'll get into that a little later. You'll need to consult. There are some specific dates you need to follow. So, but these are the high level dates that are important. All right, we'll talk about the tax exempt value. This is a big piece of the valuations, and I'll generally say there are three basic. I showed the formula earlier, but there are three basic parts of property tax. And first is the tax exempt value. The second is the taxable value, and then there's the millage. So the tax exempt value, there are quite a few. Mary mentioned that Article 18 or Article 7, Section 18 of the Constitution has the primary property tax provisions regarding valuation and so forth. And Article 20 and 21 have the tax exempt value. So I'll briefly go the residential exemption, the homestead exemption. I think that's a significant interest to this group. So, and this will be common knowledge for some of you, but others may be new to real estate and maybe not know this. So I'll be glad to share this part. So it's basically $7,500 of the total assessed value for homes is exempt for property taxes. There's a couple of exceptions. The exception is municipalities, with the exceptions of Orleans Parish. And in parish where voters approve the next $7,500 of assessed value on property received, which is owned and occupied by a veteran with a service-connected disability rating of 100%. And it's got to be certified by the U.S. Department of Veterans Affairs. So, and also a homestead consists of a residence on no more than 160 acres on one or more tracts. So, but that includes buildings and other improvements on that piece of land. So, the homestead exemption also applies where the resident owns the land or only the residential improvements. And that includes mobile homes are included in homestead exemptions on leased land. And no more than one homestead exemption may apply to any person. You may have seen that in the news occasionally, where there's someone that they will come across someone that has more than one homestead exemption, and that is quickly fixed. So, or should be. So the other thing is a special assessment level, and that's basically a freeze on the assessed value, which is, it basically says that the value shall not be increased above the total assessment of that property for the first year that the owner qualifies. And there's several categories that the owner can qualify for this assessment freeze, the special assessment freeze. The first one is people who are 65 years of age or older. And the second one is people who have a service-connected disability rating of 50% or more by the U.S. Department of Veterans Affairs. And then the next one is a bit different, but it's for members of the armed forces or the Louisiana National Guard who owned and last occupied the property, but who are killed in action or who are missing in action or a prisoner of war for a period exceeding 90 days. And then the last one is if someone is permanently, totally disabled, then they qualify for the special assessment freeze. Any person or persons shall be prohibited from receiving the special assessment if the person or person's adjusted gross income for the year prior to the application or special assessment exceeds $100,000. And again, that is if your adjusted gross income exceeds $100,000, then you're no longer allowed to get that freeze. Other exemptions, personal property, I think people don't realize this, but in most states, this is true, and I've worked in about 35 states. In most states, personal movable property, meaning residential in a home, like your furniture, your oven, things like that, that are movable, that is exempt from property taxes. So there's other exemptions, and that's in Section 21 of the Constitution. That includes nonprofit corporations or nonprofit or associations, but it has to be organized and operated exclusively for religious, dedicated places of burial, charitable, health, welfare, fraternal, educational purposes. And there's also a provision that allows an exemption for medical equipment that's leased to rural hospitals and nonprofit corporations for use of housing for homeless persons. There's ag equipment or agricultural machinery and implements. That's exempt. I didn't list it on this, but probably close to a lot of people as property used for cultural Mardi Gras carnivals or civic organizations that are not for profit. Those are exempt. I've got boats using gasoline as motor fuel on there. That's more of an interest thing because boats used for diesel use diesel fuel that is taxable. And I think that's probably mainly because those are for business purposes. And gasoline's an easier way to exempt for residents. So also commercial vessels used for gathering seafood. There's a number of others. I've listed only the main ones on this slide, but you have ships and out ocean going vessels and international trade. But also another item is manufacturing, which is the Article 7 of Section 21F is the industrial property tax exemption program. And that's been in place in the Constitution since 1936. The Constitution says it's an exemption for 10 years, or it's allowed up to 10 years. However, in 2016, the current governor issued an executive order that limited that to 80% of exemption. And there were other changes that were made to that. If you have questions about that, I'll be glad to I just don't know how deep you want to go into that exemption. Also, I think it's applicable to all real estate, and that construction work in progress, as of a few years ago, became a constitutional amendment to exempt it. However, in practice, for many years, in fact, for my career, for over 30 years, construction work in progress has just not been taxed. That's just been the practice. And this constitutional amendment basically just codified that into the Constitution. And that is an item that a lot of states do not have that exemption. For example, in Texas, construction work in progress is taxable. There's interstate inventory and interstate commerce is exempt. Also intangible. The term in the Constitution is incorporeal movable property. That's intangible property basically, but there's a specific exception for public service properties. And I'll talk about public service properties a little bit more. There's motor vehicles used on public highways. I've listed that. And those are the main items that are exempt. And on a couple of others I'll mention. I didn't list it on the slide, but expansions, restorations, improvements, or development for structures in downtown historic or economic development districts. Many of you might be familiar with that, but if it's established by a local government authority or in accordance with the law, then that can be exempt with an exemption contract for an initial term of 5 years and may be renewed for an additional 5 years. There's other items, for example, goods held in inventory by distribution centers, but there has to be a contract with the local government authority to get that exemption. Those are the primary items that are exempt, and I'll go now into the compliance to assessors, and I'll save the public service for a few minutes later. But basically, real property, even homeowners, but I've experienced this in commercial properties. If an assessor chooses to use the self-reporting forms to assist in determining fair market value of real property, he has to furnish that form before February 15th in the tax year, and the property owner has to return the form to the assessor by April 1st or within 45 days after receipt. Of course, homeowners you can always throw it away, but the risk for that is the assessor could possibly just go on their best information that they have, and they could get the information wrong on your home or other real property improvement or building, and that generally is not a good idea. So I have in the past made a point of responding to it, and there are certain things they might ask that I think are not necessarily relevant to the appraisal. You can push back a little on that, but it is good to give them the basic dimensions, square footage, basic information that they ask for real property improvements, because that definitely does not, it does go into the valuation. For business personal property, every year before February 15th, assessors mail the self-reporting forms for business personal property. And these completed forms are due to the assessor by April 1st or 45 days after receipt, whichever is later. Mary mentioned earlier exceptions for Orlean and Jefferson Parish. In this case, Jefferson Parish is the exception, and it's just within 45 days of receipt. And that's often by mid-February or February 20th or thereabouts, where you have to file that return. But upon request, an assessor may approve an extension of time to file these business personal property forms not to exceed 30 days. And there is an encouragement to file these, and that is, if you fail to submit the required forms, it is a waiver of your right to appeal the assessed value, and it may result in a penalty. So all of my peers that I know, and when I was, all the years that I've worked business personal property, we've made a point to file these forms timely, or file for an extension. The other part is public service property. This is the LTC staff, Louisiana Tax Commission staff, they appraise and assess public service property. And public service property is basically defined as to include immovable and major movable property of airlines, electric membership corporations, electric power companies, express companies, gas companies, pipeline companies, railroad companies, telegraph, telephone, and water companies. And these forms must be filed on or before April 1st. And unlike the business personal property forms with local assessors, there are no extensions allowed with public service. And there probably aren't many people in this audience that are interested about this, but just a quick FYI, I have filed the first page to technically comply with April 1st, with the understanding that I would file the more detailed report later, and that's been accepted. So that's the compliance, and it is important to comply to keep your rights and help lower your property taxes. So the valuation, well, this has been, throughout my career, this has probably been the primary focus of most property tax discussions that I've been involved in. And so I'll spend a little time on this now. The valuation date for all property is January 1st. And there are two forms of taxable valuation. Most people, of course, residential and business owners, they're very familiar with the term fair market value. That's in the Constitution. It's also in the law. And in fair market value is defined by the law as it's the price for property which would be agreed upon between a willing and informed buyer and a willing and informed seller under usual and ordinary circumstances. That is the very typical arm's length transaction, but it also says it is the highest price estimated in terms of money which property will bring if exposed for sale on the open market with reasonable time allowed to find a purchaser who is buying the property with knowledge of all the uses and purposes to which the property is best adapted and for which it will be legally used. Now, I'll go back and highlight the word, the highest price estimated in terms of money. That is not the term in most states. In Texas, for example, it's the most probable price. So that has been, a lot of assessors don't zero in on that, but that has been a way for property tax values to be on the higher range than they would be otherwise. The other, I mentioned there are two types of valuation. Fair market value, I just mentioned. The other one is use value. And this one, basically, it is for agricultural, horticultural, marsh, and timberlands. And to be eligible for this use value, the land must be at least 3 acres in size. And the landowner has to sign an agreement that the land will be devoted to one or more of the designated uses and meet the eligibility requirements. So also, this is a bit interesting, but if the land having a use value assessment is sold for a price 4 times greater than its use value, then the land shall be presumed to be no longer eligible for use value. And use value typically is significantly less than fair market value. So those are the two use values. Uniformity is required. And I will add that uniformity is required, but in my opinion, it's impossible to do. I think the idea is that all assessors are to comply with the same guidelines from the tax commission. They are to apply the same general concepts, but of course, every assessor is different. Some assessors are even politically motivated to have higher values. Some are really do or make a very much of an effort to get closer to fair market value. But uniformity is very hard between parishes. There is a provision that's required, a rule and law says there has to be criteria for determining fair market value. So the criteria, it includes uniform guidelines, procedures, and rules and regulations necessary to implement the criteria. And that's by the tax commission, the Louisiana Tax Commission, which we mentioned earlier. The fair market value, for those of you that have had independent appraisals, or maybe you are an appraiser, it's determined by the following generally recognized appraisal procedures, which are the 3 approaches to value. It's the market approach, the cost approach, and the income approach. The market approach is often called the comparable sales approach, or you can have a combination of the 3. The fair market value should be determined based on individual characteristics of the property. That's very important. With assessors, they do use, understandably, what's called the mass appraisal concept, and they use software to mass appraise, meaning they will apply a lot of the values per square foot for a particular neighborhood of homes within a similar age, but individual characteristics have to be considered in those appraisals. If, for example, if you've had significant damage, then then that has to be considered. Finally, if you use more than one approach to value, and for homes, for example, that's almost always the market or comparable sales approach. But if you use more than one approach or even all three approaches to value, the final determination the assessor has to consider three items. One is the relevance of each approach, so the property being valued. For example, the cost approach wouldn't necessarily be relevant to a home value because there's generally an active market. Secondly, the amount and the accuracy of the data used in each approach. You don't want to use an approach that has inaccurate value. And third, the strengths and weaknesses of each approach. So that varies by the type of property that you have. So and that applies pretty much to all property. And I'll comment on one specific part that might be of interest to some of you. With affordable rental housing property, the assessor is not allowed to consider income tax credits, below market interest rates on financing, or any other federal, state, or similar program. Those are not allowed to be in the valuation. The Constitution requires appraisal of all property subject to taxation at intervals of not more than 4 years. So with real property, that's every 4 years, pretty much. The exception to that is most recently has been if there have been hurricanes, if there have been major damage, then certain parishes can have reappraisals. But what's not allowed is what's called sales chasing. You can't have a few sales to set the market and then some other area of the parish not have sales, and there'd be a bit disproportionate percentage of or comparison to the actual market value. So that is not allowed. But every 4 years, there's a general reappraisal, and that's done generally parish-wide. And the tax commission will usually issue an order in their annual rules that will say, give a heads up that the next year will be a reappraisal year. So business personal property is different. It is revalued every year, and it's primarily based on data from the annual tax returns and information provided by taxpayers. The LTC rules restate the law and provide guidance to assessors. And just to give you a sample of the types of property that are in the LTC rules, you've got watercraft, oil and gas properties, drilling rigs, pipelines, aircraft, inventory, leased equipment. But most of the business personal property that most people can relate to is in Chapter 25, which is general business assets. And I will say that there's an informal process. There's and during that informal process, prior to filing a complaint with a local board of review, the property owner must submit to the assessor or the designee contracted by the assessor, because there are contract appraisal firms that some assessors use. But they must submit any additional documentation and information the property owner believes is relevant to the determination of fair market value. And that is very important. Company representatives do that routinely, especially if they are a large taxpayer. They will submit information that is relevant to the valuation. Also, very important, the assessor shall legitimately consider all evidence and information submitted or publicly available to the assessor, including the consideration of functional and or external obsolescence. Now, that is in a LTC rule, and I emphasize the word shall. There are times when some assessors have to be pushed on that point, and more to the point by appeals to the tax commission, and they remind them at that point that they must consider functional and external obsolescence. And I will quickly say, those of you in real estate, you know this, but I will quickly say that there are some assessors that are of the opinion that functional and external obsolescence, this is primarily in the cost approach to value, they tend to have the opinion that those are adjustments below fair market value, when in fact, those are adjustments to get to fair market value. Because a lot of business personal property is simply cost times a composite multiplier, which is a combination of an inflation index and a percent good, which is the inverse of depreciation. So that's probably getting a little deep, but I want to let you know that business property owners and their consultants make this point quite often, that there are sometimes adjustments that are necessary to get to fair market value. So the more formal part of the review part for valuation is assessment lists. And Mary mentioned this early on in introductions along with dates, but there are certain dates. I won't go through all of those again, but I'll highlight some of them. But assessment lists shall be open for public inspection each year for 15 days between August 15th and September 15th. Of course, the two exceptions are Jefferson Parish and Orleans Parish. And I would advise you to look at those a little closer later on, but I'll just leave it at that. There's some differences, but the general window is between August 15th and September 15th. So you go through that period, the assessors they may make some changes to your account, to your assessed value during that part. Then each assessor shall change the assessment list during the public exposure period. Then they certify the assessment list to the parish board of review within 3 business days of the final exposure date, except Orleans Parish again, where the assessor shall certify the assessment list to the board of review on or before the 10th business day after August 15th. So those are some nuances, again, with mostly in Jefferson, but especially in Orleans Parish. Those are some dates that I could easily be too detailed for this presentation to get into specific dates on that. Public service is, again, that's valued by the tax commission. So those values are determined each year primarily using year-end FERC financial reports. Now, FERC is an acronym for Federal Energy Regulatory Commission. And those are required to be filed every year end by electric companies, telecommunications, pipelines, and all those other public utilities. But the valuation is also determined by LTC studies and their analysis and their appraisal judgment, but also information provided by owners. And that's again a very important part of the valuation for a public service property. Weight is assigned to each approach to determine the final company-wide value. And that's a company-wide value. When I say company-wide, that means multiple states. Most public service property is in multiple states. But then that company-wide value is apportioned to Louisiana based on one or more percentages of its portion of Louisiana divided by the total company's investment. It could be tracts of miles for railroads or pipe for pipelines, pipe miles, and other factors. The Louisiana value is allocated to parishes and submitted to the assessors by September 1st. And although this is all a process, both the local and the public service property, those are certified. There's also what's a change that's very common. It's called a change order. And these are very commonly done for just plain omissions or some error, just basic error. And it's called a change order, and they change the value and they submit it to the tax commission, usually electronically or almost always electronically. And the tax commission generally approves it, and then it goes back to the assessor and they submit it to the tax collector. So that's how late assessment rolls are changed. And that's done quite often. We made some changes as late as February, even recently for the prior year. And when that happens, of course, the delinquency on when the tax is extended, those usually put on hold. Then there's a new delinquent date based on when the tax bill is sent. So I will talk a little bit about appeals, and I won't go into detail of appeals. I'm not an attorney, and I would advise if someone has a really large property, then they should probably consult an attorney. But I'll briefly say that as I mentioned earlier, the parish police jury or the parish council is the board of review. So the board of review has hearings generally which begin 10 days after it receives a certified assessment roll. And on the 15th day after the board of review begins public hearings, that board of review has to certify the assessment list. So in other words, the board of review meets about 2 weeks during that period. And the board of review has the authority to increase or decrease assessed values made by the assessor. But like the assessor, that authority only is in compliance with the fair market value or use value required by the law and the Constitution. So they can't just simply have their opinion of value. It has to have a real basis for value. Orleans Parish is the exception. And I'll just quickly say that board of review, on or before the 10th business day after public inspection, the assessor has to certify that roll. And they certify the assessment list by October the 20th. So the Louisiana Tax Commission they take the local board of review. The local board of review is final unless it is appealed in writing to the LTC within 30 days. And that's usually or often the end of it, depending on the significance of the property that the property owner may or may not want to appeal. But the tax commission is often a place where property owners need to get their relief, the property tax relief. And a good example is recently I noticed on the LTC agenda, and you can see their agenda that they meet often. It publishes the appeals. There were a number of appeals from Orleans Parish recently, and of course other parishes, but I just remember seeing that recently. So with that is the process, the main process of appeals, and I'll pass it to Mary to talk about the next phase.
Thanks, Bob. And it looks like the slide got a little bit messed up, so I apologize for that. But for sake of time, I'm just going to go over this really quickly. So the state constitution basically provides for the classifications of property and percentages or assessment ratios of fair market value. So you'll see that land is classified at 10%. Improvements for residential purposes are classified at 10% as well. Electric cooperative properties excluding land are classified at 15%. Public service properties excluding land are classified at 25%, and all other property is classified at 15%. And so the final taxable appraised value multiplied by the applicable assessment ratio is what will determine the final assessed value of any taxable property. So that's just a basic rundown of that.
If I could add, Mary, and I hear legislators and other policymakers say quite often that there's a 5% difference between 15% and 10%. But I'll remind them, if you just do the math, that's a 50% difference. 15% divided by 10% just basically has 50% higher. So that is a big difference between land and residential and most business property. So just bear that in mind. Of course, public service property is even higher. But those were set in the Constitution, state Constitution, I believe, of 1973. And that was set up for a purpose. So that's, I'll just leave it at that. Those are the constitutional assessment ratios.
Thank you, Bob. So we'll wrap up in the next 5 minutes with discussing millages. Bob, you want to cover this?
Yeah, a mill is $1 per 1,000 assessed value. And that's common in a lot of states. In some states, it has a dollar per $100 assessed value, and like it is in Texas. But that's the way it is in Louisiana. So the Constitution, and by the way, the average, the state average millage in Louisiana is around 112 mills, something like that. So the Constitution mandates the adjustment of property taxes either upward or downward, depending on property values. And that's usually every 4 years, which is also known as a reassessment. And authorizes increases in millages after reassessment, but not in excess of the prior year's millage, maximum millage, which is known as a rolling forward. So reassessment does not apply to millages levied for payment of general obligation bonds. So I'll say that also that the legislative auditor has oversight of the millages. They monitor maximum millages that are allowed by law. And all tax recipient agencies are required to furnish the legislative auditor no later than June 1st of every year a number of information, including ordinances or resolutions, local or tax rolls and millages to be applied to the assessed values for property tax purposes. So those are, the legislative auditor will review those and issue the maximum millages. I will, it's not on the list, but I can quickly go through this. Of course, the last part of the formula is the actual tax payment. And I will say the assessors shall assure the approval of the tax commission before filing their assessment rolls with the tax collector. That's very important. Also, if this passed a few years ago, if the assessed value of real property with a residential homestead exemption increases by more than 50% of the property's value from the previous year, then the tax collector shall phase in the additional tax liability for that residential property over the next 4-year period. And it's in 25% increments for the next 4 years. Property taxes must be paid generally by December 31st in most parishes, with a 1% per month penalty if you do not meet that payment deadline. The exception is Orleans Parish, which is generally paid by January 31st. I say generally. This year they extended a little bit, but generally January 31st, are in 2 equal installments on or before January 31st and May 31st. So those taxes will become delinquent after those dates and have a 10% per year delinquency penalty. So that is an overview. I think we've about hit our close to an hour and want to allow a little bit of time for Q&A.
Well, and just to hit briefly, I think Jason and Ken did a great job of kind of setting the stage for this year in terms of the legislative session and also the election cycle that we're about to go into. I did just want to highlight some of the property tax bills that Advantis is currently tracking. So the 2023 session convened on April 10th. It is a fiscal session, meaning that legislators are limited to the types of legislation they were able to file. They had to follow kind of more of a tax, they really could only file certain tax bills, basically. And then outside of tax bills, they were able to file 5 additional bills. Overall, there's been about 900 bills filed altogether. Advantis, we're currently tracking about 150 tax bills. And it's been a pretty light year in terms of tax legislation. Kim and Jason said, it's an election year that might have something to do with it, but we're not tracking a tremendous amount of property tax bills, but these are just some of them. If y'all have any questions, like Jason said, I'm at the Capitol every day. Jason is there as well, most of the time. So we are happy to hop on the phone to discuss any of these you may have questions or concerns about. With that being said, y'all want to go into questions? We have a few minutes, it looks like.
Mary, we did have a couple, unless somebody just wants to ask questions right now. Let me see if anybody has their hands raised or their thing. Let's see. I can't see anybody right now, but I don't have it on the view. But we did have a couple of questions in the chat. And the first one was more of a comment that the VA homestead exemption is only for the parish and not the city. Bob, Mary, you have any comments or clarifications about that?
I think that is correct, but I will be, I am not an expert in that specific area, but that is my understanding.
Kim, homestead only applies at the parish level, period. It never goes down to the municipal, no matter what the exception or exemption is.
Right. Okay.
Thanks, Rhonda.
So the next one we had was, is the AGI cap 100,000 for the entire household?
That, again, I was reading that from the Louisiana Tax Commission rules. I have to refer to that to get a specific answer.
Okay.
But
and this is just something from my previous life. I believe to get a homestead exemption on a mobile home, it has to be demobilized, and you go through that process with the Office of Motor Vehicles.
Good clarification. Okay.
See, does anybody have any questions now or any comments? Let me see if I can view everybody side by side.
Is the AGI question related to the senior freeze?
It came up on slide 2. So I can't remember who asked that question. Let me go back and see if they want to clarify it or not. If they don't want to, that's okay. Let's see.
If it's the senior freeze, it's going to be the
Catherine. Okay. Catherine, are you still on?
I don't know, but if it's a senior freeze, it's the total for the owners shown on the deed of the property.
Okay. All right. So does anybody else have any questions or any comments? We can always get Bob and Mary and Jason to follow up on anything that you do have questions or you want any kind of additional information on, whether we do it through a Zoom or supplement the overview that's available online. And I added that to the chat and the site where you can get it, and also the PDF. I hope y'all find that helpful in your day-to-day practice and as discussions about how we fund services in Louisiana, both at the state and local level, continues through this year and the election season. We think it's probably going to be a topic that is discussed a lot. And we wanted to be able to be the first ones to give you the information that you're going to need to have to wade through those discussions in an easy place to go and a big overview. So.
Thank you so much, Kim, and thank you for inviting us on today. It's been great.
Okay. Tony, Cindy, Rhonda, Norman, anything to add?
No, we just, we hope this helped. We plan to do more of this. To bring you expert analysis of different topics that obviously that you deal with every day with the clients and customers. And I was out of the room for a second, Kim. I had to take on. Did we go through the questions on the?
We did.
Okay, great. Did y'all just kind of let us know, send us a note if you thought this was beneficial. I know this gets technical with tax issues. Other issues might not be as technical, but hopefully with the handouts and any follow-up that Kim spoke of, we will be happy to do that to make it more easy for you to understand and relate to your clients and customers, and also help us advocate over the next several years as this debate only increases with tax issues.
And we understand it. Look, a lot of it was Greek to me too. So we understand that. And that's part of the reason we wanted to provide you this now. And put it on the YouTube page. So as these discussions go forward over this year and the next couple of years, y'all have a baseline to understand them. As we know, many of your clients, you help people buy and sell property every day. So property tax is something that is relevant to each of you and your clients. And I bet you get lots of questions about. So thank y'all for joining us today.
Thank you so much.
Thank you.
Y'all have a great week.
Thank you. You too.
All right. Thank you. Let's see. How do we turn it off?